The euro sank against the US dollar yesterday, and there were two reasons behind the fall in its value. Firstly, the European Central Bank raised interest rates by 75 basis points yesterday. However, neither traders nor economists expected the regulator to maintain an ultra-aggressive stance on monetary policy. The ECB did not mention the level of further rate hikes and said they would be data-dependent. Therefore, the bank will no longer give any long-term forecasts for further aggressive tightening, as the regulator fears a recession in the Eurozone. As a reminder, inflation did not exceed 10% in the previous month, meaning the ECB's actions to tame it proved to be effective. Moreover, consumer prices are expected to slow down further, so there would be more ultra-aggressive measures due to high recession risks. Secondly, yesterday's US GDP report logged a 2.6% rise in the third quarter, beating economists' expectations of 2.3% and following a decline in the previous quarter. On the one hand, this is a positive factor for the American economy. On the other hand, this is a negative factor for the equity market and the buyers of risk assets who hoped that the Fed would hint at the possibility of a slowdown in the pace of rate hikes next year. However, in light of the latest data, the US Central Bank may stay aggressive and lift rates for as long as inflation reaches the target. This will limit the prospects of the euro, the pound, and other risk assets. Today's macroeconomic calendar contains statistics on Germany's GDP in the third quarter. The German economy is projected to fall by 0.2% on quarter in the third quarter of the year. On an annual basis, GDP is estimated to expand by 0.7% in the third quarter. Meanwhile, the country's inflation is forecast to rise, so the euro may feel pressure today. In the United States, data on personal income and personal spending will be published. These figures may have an effect on the American economy. Although economic activity in the country expanded significantly in the third quarter, the latest statistics indicate that the economy is slowing down. This will, of course, be a painful blow to the greenback, which has been on a losing streak against the dollar, against the pound and the euro this week. Likewise, the dollar may feel additional pressure from the results of Michigan consumer sentiment and pending home sales. And now let's turn to the 1-hour chart of the euro-dollar pair to get a picture of what is happening there. We should focus on 0.9948. A false breakout through the mark will give a buy signal. Likewise, a signal to buy the instrument will be made after a false breakout through 0.9899 with a view to catching a bullish correction. Long positions at 0.9855 could be considered on a rebound only. Should the euro go up following the release of macro data in Germany, a false breakout through 0.9998 will generate a sell signal, and the quote will return to 0.9948 and 0.9899. Meanwhile, if the bulls break above the parity level, it will become possible to go short after a false breakout through 1.0042 or on a bounce off 1.0090. As for the British pound, it is still moving within the channel. Resistance and support are seen at 1.1601 and 1.1535 respectively. Today we should focus on support, as a false breakout through the barrier will give a buy signal. Then it will become possible to go long on a rebound at 1.1476 and 1.1432, allowing a bullish correction of 40-45 pips intraday. Should the bears break through the 1.1538 mark and test the level from bottom to top, it will generate a sell signal with a target at 1.1476. If the quote goes up, a false breakout through 1.1601 will occur. Then short positions could be considered on a bounce of 1.1670, allowing a correction of 40 to 45 pips intraday.